Good weekend, all. Ira Epstein of Linn Associates with your financial market wrap-up, and I waited to put this out Sunday evening. It's 5:20 p.m., so welcome to Sunday evening, June 6, 2021. And before we go into the markets, let's understand what we got on the non-farm payroll. To me, this was the sweetheart number, the sweet spot, right on the money. I had written this week that I certainly didn't want to see a job number with a 2 in front of it. That would be very bad. A 3 would still be bad. A 4 wouldn't be as bad as it can be. Anything with a 5 is okay, and anything with a 6 or 7 is a hot number. That was how I decided to rate all this. Came in just how I wanted it. Second thing, where did the market go with the revisionment? Are you kidding? 12,000 jobs, that's it? It wasn't a fluke that we saw. So we're still in that situation where I think you have to understand that people that make minimum wage, and you are probably not that person. I get people that write me, do I really think $300 matters? Yes, you're not that person. You're not making the minimum wage. They are. They're not my audience. They don't have the money to trade in futures, in stocks typically, but it's important to them. And that money doubles what they make. And then they sit there and they go, gee, I don't want to be in that restaurant 10 hours, being a busboy, taking all that, doing whatever I've got to do, and all these service jobs that are not high paying, that rely on tips and the like. They'll come back now in stages, because 24 states have said no starting June 10th, 4 days from now. They're not going to renew and let them get that extra $300 a month from the government. They'll look at their state benefits and say, I can get a job and make more. And I know you don't agree, because I get people write me, I can't believe that you don't understand that. And those people will come back. Then the other thing, where are we getting the jobs? Private sector, I love that. So while people keep talking inflation's going to take off, I haven't joined that whole camp. We have supply chain issues because of labor in many cases. Semiconductor chips, nobody's telling me we're out of the materials that make them up. There's other things going on, a fire in one plant, other parts, staffing that you need. They're building the plants, but let's go beyond that. As long as you're getting the labor and you want to go to a restaurant, they're going to be able to give you all you want. They'll bring more menu items on, blah, blah, blah. That's going to happen. I'm just using the restaurant as an example. It could be a barber shop. It could be you going to Disneyland. I can go on and on and on. Labor is important, but that labor is getting more money. So while the government's saying, oh, we got to put in a $15 minimum wage, well, I don't know. Our average hourly earnings are $30. It's average. The low end certainly sinks that, and then you're looking at all the high-priced people. But you are getting increases. I'm not against or for anything. I want to know more about it, but that's where I'm at. So when I look at the boards behind me, metal's pretty stable. Dollar doesn't know what to make out of it, nor do many of the currencies. But the currencies, remember, you're getting the European Central Bank this week going to give us their monetary policy. So when we go to a monthly area chart of closes, we're only at June 6th, we're up 0.67, and this is a new monthly high at this point in time. When we go to the weekly, this first day of the week, and here's the market at the high of 42.3250, right into these old highs, hasn't given anything up. What about the sell may go away? Well, these are your May highs, so we got to deal with those. And as you can see, you had in May 42.38 and a quarter. You have not taken that out. So that still becomes one of the question marks. The pattern, by the way, is a higher high, lower low, which is not a trend. The market is over the 18-week average, so I define that as bias being up. That's my line in the sand. When the market is trading over that 18-week average, I have an upside bias. Downside bias when it's under it. If the market starts to break down into a trend, that's often the first, and I'm talking from these highs, that's often the first support zone as well. Then I step over and I look at Bollinger Bands. Well, one of the resistance is 43.44. That's the current band, and that take you through those highs. So that's something to look at. But what's really been stopping this market is the combination of the Bollinger Band and window envelope. Now you're going to say, why don't I put the window envelopes up here? Because I put them out every day and weekend for my paid subscribers, and since this is free, I hold back certain things. Like, where's the moving average to come in to buy when you have an embedded slow stochastic play like you do here? I'm not going to show you that either. I keep these things for my paid subscribers. You get a nice portion, but I'm not going to give away the shop. And then I give very specific buy here, sell recommendations because the public sees this. But in order for me to say, I want you to buy, I want you to sell, this is where I want your stop order on it. In order for me to do that, the environment has to be that where the public cannot see it, limited to a certain group of people, my paid subscribers. That's how the real world works with regulations and all, and how I want it to work because I want to be paid for what I do. So, embedded reading, I think the pros are buying this market until that red line closes back under, that makes up the stochastic, 79. I don't see that in the NASDAQ. I see a chop market, what I call that psychiatry trade, just going back and forth right here, not ready to break out one way or the other. In the Dow Industrials, as long as I have the embedded reading, I'm jumping up and down. I want to be a buyer in the market, looking for that high. You still haven't got through the May high. I'm fully aware of that too. And I'd be wrong in my thinking if you get a reading in the slow stochastic by the end of the week under 79. On the Russell, not the same game. It's in what? Got momentum pointing up, but you have a lower low, higher high scenario. And a narrowing in funnel right here. You're really narrowing in the trading range a lot. That won't stay that way very many more weeks, so something's going to give there. Then we get to the bond market, which has caught the pros. How many people were you saying interest rates higher, higher, higher? That's all you kept hearing. Well, interest rates are going lower, lower, lower right now. And they're ratcheting up that way at this point. And on a weekly basis, you have higher lows, higher highs, momentum up. You're over the 18-week average. I contend that the pros are buying at 158.11. And I think they'll throw in the towel if you get under 157.4. And they're looking for something in the 160s to the 163 area. Why do I say 160s? Because I know where the window envelope is. In the 10-year notes, same thing. Higher lows, higher highs. You're throwing out the first buy signal today. You got over 2 weeks ago's high, so that'll give you higher lows, higher high. You don't want to see prices under 132.16.5 on a weekly basis. Until that happens, one of the targets is 134.22, the 100-day average. Dollar index. My eye goes here. When I see an oversold market, I don't think that attracts new selling. I see the trend is down, the bias is down. If the market wants to let go, well, then I'll look for 89.18 to be the support. Where do I see resistance? 91.0, let's call it 91.10 to just round it. And I don't want to see prices over that high. Do I think the pros are selling in an oversold market? No. Eurocurrency, do I think they're buying in an overbought market? No, but remember, we have the ECB meeting. You're overbought. The most I'm looking for right now in front of that's the upper Bollinger Band. After the meeting, I don't know what they're going to say. We take a fresh look. Canadian dollar, bullish. One word, bullish. Embedded reading. On pullbacks, I expect the pros to be buying on this, looking for the upper Bollinger Band. In the Japanese yen, oversold like in the dollar. Therefore, I don't think you're going to attract a lot of new selling here. That's not to say it can't go lower. The trend is down. The bias is down. It's simply oversold. There's no reason to be buying. That much I'll stick my neck out. Bitcoin, you're down to the what number? You're right down to the Bollinger Band. What do I teach when you go there the first times? And especially if you don't have an embedded reading. Do you know? Well, if you don't know, this is a good time for you to learn by taking my Bollinger Band course. Yeah. In my Bollinger Band course, it's 13 chapters to teach you how to do this. I'll cover everything. You learn the makeup of it. Now, I'm assuming you understand what a Bollinger Band is, because the course does not pick up and do that. The course starts assuming you know what they are, how they work. From there, I'm going to get you your doctorate's degree. It's like taking a college course online. I'm going to teach you what I learned, how I apply it, what I would think you do, how the clients that subscribe with me, what they're following through with it, and away we go. And I promise you, in all my written recommendations and in my morning subscriptions, I'm exactly putting out what this course shows. So that's the beauty of the morning subscriber video. It reinforces this over and over at 5:40 in the morning, and if you're a SPDR ETF trader, right after 5:30. In the meantime, I'm Ira Epstein. You have a great day, and I'll talk to you all come Monday. Take care.